Okay.
So now
Walk me through the process again. You, from the time we had our last mentoring session until now, you recognized you needed a plan. So one more time, tell me how you put it together.
I mean, I needed, I already had the plan written out, but it was like specific little goals for that day.
Okay.
That way I keep focused on what I'm trying to gain here. So, Monday was a holiday. Tuesday, that's when I said my goal was to get the trade-in demo into sim to make my points in sim. And then for Wednesday, get my points with the micro ES. And then for the Thursday and Friday, my goal was to trade the ES and get my points there.
And how did it go?
Out of the 4 days, I got my points the three out of 4 days. So I think so far that was a pretty good week.
What about,
I learned more.
how about yesterday and how about today's Friday? How about Thursday and Friday?
So for today, I traded, let's see, today's trading, I got my points in 2 trades, trading the ES.
And that was trading real money.
Right, trading real money.
Okay.
Yesterday, let's see, maybe we can we go back to Monday at 6:15 p.m.
Okay, yeah, let me scoot back here. You can see my chart, right?
Yeah, I can see it.
Okay, so we're going back to what day now?
That'll be Monday the 17th at about 6:15 p.m. Eastern.
Okay, so we're talking holiday trade.
Yeah, holiday trade.
Okay.
I didn't trade.
That's okay. I'm just wanted to, for the record, I just wanted to say that it was President's Day, but go ahead.
Yeah. So I didn't look at the chart Sunday night or all day Monday until Monday night.
Okay.
So just to look at the charts to see what was going on. And I think at that time we didn't have the weekly trading zones for this week at that time.
Yeah, when there's a Monday holiday, they come out on Tuesday morning.
Yeah, that's fine. But I was looking at on the 30, if you go to the left a little more to the previous bullish cross.
Right there.
Yeah, I was like,
Well, see what happened. See, sometimes when price can't get through a certain level, it'll jump over it. And look at that. It's exactly what it did.
Yeah.
It leapt right over that. Because what you're thinking is price should come down. Hopefully you're thinking price should come down and find support at the weekly trading zone. Because that's what we expect. When price is falling, it's support. When price is rising, it acts as resistance. And I'm talking about the zones. So yeah, I noticed this. How we just gapped right below that, and right there, that was a tip off, because this is a very important price, important area. Not just because there's a weekly trading zone there, but because there's a bullish cross, as you mentioned. Okay, so we gap below, and you're looking at this chart Monday night. Tell me what you see.
Yeah, I saw that it gapped down, but the thing is, the high of that first 30-minute bar, that red candle at the 6, it was the high. They sold off right at that bullish cross level, the prior one. I'm like, I couldn't believe it. There's no way. So it's just,
okay, so you're saying the same thing I'm saying, but you're looking at it from a different perspective, and I like that. Thank you, because it didn't really. Because as you can see, there's a little bit of wick on the top of that 30-minute candle.
Yeah.
What that means is when the market opened right there, there was actually a flash of green. The market actually tried to go higher right there, and it ran smack dab into that. And okay, go ahead.
I'm like,
thank you for pointing that out. I actually missed that part of it myself.
Okay. And I was just thinking, listening from you, that's a important level. Like, wow, they traders must be looking at that. So, I don't know, but it just, that's the way it happens. So watching it overnight, I didn't trade it because the previous week I traded overnight in sim mode and got stopped out a couple times. So I'm like, that's not in my plan. So
Okay.
I was just watching it and watching to see, you know, as long as it stays a bearish cross, and see how far we'll go. Will it go to, let's see.
Now, the ones that got stopped out, let me ask you a question. Did they go back to trigger again at the same price that you entered?
You know, it was over a week ago. I'm not sure. I don't remember. Yeah, honestly, I don't remember.
Okay, I don't talk about this a lot, but it's just something I've heard of. I've not researched it, vetted it. I think they call it the 80-something% rule. Anytime you get in a trade and price comes back to stop you out to the tick, that's a loss, right?
Right.
If you take the second entry, again, I haven't vetted this, but it's some 80% rule that they say the second time. And what I'm just giving you a little information here that you can go back and look at charts, and I want you to look particularly at the ones you got stopped out on this week. See what happened. How much did you get stopped out by? And then now tell me how you're setting your stop. Are you using just a hard number, or are you using market structure?
No, I'm using 8-tick stop.
Okay. You'll 80% of the time you'll get stopped out on an 8-tick stop. Now, were you trading an actual trade setup, or were you trading the alerts?
No, I wasn't trading alerts. I think I was. See, that was last week.
Yeah. See right here. This is the day that we're still talking about. A Sunday night gap open and into Monday night. See, there was a concierge trade alert to be short 33.71. So it dropped down to 67.25. So what's that? 3 3/4 points or something.
Yeah.
And it got back above the trigger, did it again. Got back above the trigger, did it again. Didn't quite make it above the trigger this time. And you see why it didn't get above the trigger?
Yeah, the BBC.
Green and falling. And when you approach it from below, resistance, back to the zone of support, back to resistance at the BBC. This is buyers and sellers duking it out. And as long as you got that blue and climbing, you got to respect that. You can't be shorting here for two reasons: because of the blue and climbing, and because of the weekly trading zone.
Right.
So then it gets back above the trigger another time and takes us not only down this zone, but almost to the next zone. So from 71, we dropped almost 20 points, or at least 15 points, whatever the math is, in just the last move. So watch these, and I certainly want to encourage you to go and find the trade setups yourself. That's important. That's learning how to trade. You know, having the alerts and all of that, that's great as long as you're learning along with it. You know, not just blindly trading them because, oh well, he said. No. You take the alert, you go look at the chart. It makes sense to you. You understand it, and then the next time that same scenario presents itself, you'll know what to do. And when I send you the alert, all it'll be then is just confirmation to you of what I already taught you, what you already learned.
Okay.
So are there any individual particular trades you want to take a look at that you got stopped out on? Or I don't know if you have the records right in front of you, but if you do, we can drill down and look at them.
Let's see here. Actually, on the 19th, February 19th, which was Wednesday.
Okay.
Yeah, I was trading live money with the micros.
Okay.
And let's see, it was probably about 9:33 a.m. Eastern time.
Okay. This alert triggered during the 9:30 opening candle on the morning of February the 19th, and it ran straight up to the weekly trading zone overhead where we would expect it to find good resistance.
Yeah.
So we went from 80, based on the alert, we went from 83 to 88. So we call it 5 points. It's a 5-point move.
Okay.
So tell me how you traded it, where you got in.
Yeah, I did a slingshot trade on the 4-tick range chart.
Okay.
I did do a long.
Did you look at the 30-minute chart first?
Yes, I did.
Okay, good.
So I was focused on being long.
Okay, perfect. That's exactly right.
Yeah. And it was the first at 9:33. So the market had
right
just
at the opening
up.
bell. Okay.
And I got stopped out full 8 ticks on a slingshot trade, and this is the second time that's happened in the first couple minutes of
Okay.
trading.
Are you looking at that trade right now?
No, right now.
Okay. Because if it came back and stopped you out to the tick, I think you're gonna, when you go look at it, you're gonna see that 80% rule, whatever it's called. Because I bet you the next time you got that same entry price. See, here's the key. It's not about getting the setup over again. You get the setup at a price, you get stopped out to the tick. You then re-enter at that price, even if there's not a setup.
Oh.
Now, this is something you got to test and put to work for yourself, because I'm telling you, I haven't fully vetted it, but it's given me a very interesting perspective. Because how many times have we all said, "Oh man, I got stopped out of the tick," or "I always get stopped out of the tick," or whatever the case. So it happens a lot. Go back and start looking at those trades and see what happened the next time that price triggered, even if there wasn't a textbook setup, to see what happened.
Yeah. Okay. Yeah, I'm looking at it now. Let's see. Yeah. Almost. Let's see. Yeah. So if I got in long 82.5 with the slingshot trade, got stopped out. And then it eventually came, not to the tick. It kept on going, maybe another almost 3 points against that, the stop.
Okay, but did it come back and trigger long again at 82.85?
Yes, most definitely. Yep.
And would that one have been a profitable trade?
Let's see. Let's see. It would have went 1 tick in my favor and then pulled back about 7 ticks.
Okay.
7 ticks, and then rallied for another almost 5 points.
Okay, so on the third time, I guess for you on this one, it went the distance.
Yeah.
Because you see, when it comes back and gets stopped out to the tick, you got to look at that 30-minute and go, okay, so if it was on this candle here, and it got stopped out, you got to look at you go, well, but it's still a bullish picture.
Still bullish, right?
So my my sentiment wasn't wrong. My entry time was just off by a few ticks, right? I either should have got in a few ticks sooner or a few minutes later.
Yes. Yeah. Interesting. Okay.
Now this one here, this was a tough one to do, because when price pulled back to the BBC, you got that zone right overhead, which you expect to be resistance. Plus, it's the opening of the evening session, which is typically kind of lackluster, right at the open anyway. So it poked its head right up above the long alert. Long alert, I guess, was 95, and we put in a high at 97.5, so it went 2.5 points. And then came back down to the zone below. That's kind of textbook too. You get a red candle right to the zone, and then a doji in the middle, which represents indecision between buyers and sellers. I mean, once we're at the zone, we already know one of two things is going to happen. Price is going to go to the zone overhead, or it's going to the zone below. One or the other. It may not go there in a straight line, but when price is at the zone, it either goes to the zone below or tries real hard. And then when it gets back up to that same zone, now it's the same decision. It's either going back to this zone or it's going to try to get to that zone.
Right.
And it did. And then from this zone, are we going to the zone overhead or are we going to the zone below? Well,
overhead.
Right here where it's red, it's looking like maybe we turn south, but then this thing turns blue.
Right.
And as long as you're on the left side of blue and climbing on a 30-minute chart, don't be so quick to jump out of the trade.
Okay.
Hope that helps.
Yeah. It's something to think about. That's good.
So price went from zone up to the zone, down to the zone, back up to the zone, back down to the zone, back up to the zone. And then we caught that sharp sell-off that in 30 minutes, well, in an hour, took us all the way across 1, 2, 3 entire zones.
Yeah, that's where I made my point.
Did you? Okay, tell me about it.
It was my first trade. Let's see. My first trade is at the 10 a.m. bar.
On the 20th?
Yeah, on the 20th.
Oh, 10 p.m. Okay, so that's going to be...
Oh, I mean 10 a.m.
10 a.m. Okay, yeah. All right. So here's the 30-minute 10 a.m. candle right there. Right there.
Oh, okay. I gotta look at my notes better. Yeah, it was February 20th, 10 a.m. I was actually going long.
Okay.
On a slingshot trade.
Okay.
I was able to get a couple of ticks out of that.
Okay. Well, you see what happened from the open of this candle, which was 85. It did run up 3 points. It actually ran up 4 points to 89. So this candle opened at 85 and ran. So the market made 4 points available off of that 10 a.m. to 10:30 candle. And then we get these two. We get resistance. Then we get resistance. And this is when the whole thing just came unglued.
Yeah. And then I made the other, whatever, I made 6 more ticks to get my points at the 11:30 bar.
This one here, okay, and tell me what the trade was about.
It was a 164 trade short at 33.61.
Okay, beautiful.
Yeah, I like that we were slicing through the 65 weekly trading zone.
Yep, but look what happened. Okay, when this candle opened, it first went green.
Green. Yeah.
When we slice through a zone, what we expect to happen is we expect price to retrace to the zone. Because see, it failed to be support coming down. So now we're going to check and see if it'll be good resistance. And while it didn't perfectly touch it, you had a green candle building, which then quickly reversed. And there's a huge red candle that spiked this zone. The lowest zone is down at 12.13 for this week. So going along up here, you got a few ticks. Then what happened?
So yeah, so I got in that day 2 trades. The first one was the long,
okay,
and then the short.
That was the one you just told me about. Okay.
Yeah. So that I got in 2 trades. I got my points yesterday.
Good job. Excellent.
Yeah. So that was good. I was trading micros, and then today I trade the ES for today. Oh, before we go from yesterday.
Okay.
Since I made my points early in the morning, after the big down move, I didn't look at the markets. I put the mouse down.
Right.
But when I came later in the afternoon, I'm like, wow, if I didn't make my points early in the day, I don't know if I would have made my points in the afternoon, because I would be looking only for shorts.
Well, you're only at this point here, you stop looking for shorts.
Oh, okay.
Because you're printing a green candle, right? Now,
Right.
when you hit this zone right here, this red candle right here, you got red and falling up here. So for me, the temptation to go short here, back down to the zone, would have probably been pretty strong had I been looking at this market at that time, taking that trade. Because what do we expect to happen when we get to that zone? Resistance. And this red candle says we got resistance. We got red and falling. Just get short, Dwayne. But the market doesn't always do the next high probability thing. Now, did it ultimately come down here? It did.
Yeah.
But it did this first. Now, the only issue with that red candle, okay, if you look at my crosshair,
right,
look straight down on that slingshot indicator, you see how that's blue?
Yes.
Okay. If that had been red, this, well, let me say it this way. If price had kept falling, or if price hadn't risen so much on these two candles, this very well would have stayed red. Right. So what I'm saying is getting short here, I got red and falling, but down here I got blue. So what you can do now, did I just ask you, were you at last night's workshop?
Yeah, I was there.
Okay, so you saw me go through the whole 5-minute thing, right?
Yes, I did.
The 5-minute chart. Okay, so let's take a look at this red candle where, oh, that's not the same one. Let me get back to there. It was this one, right? Yeah.
Right.
Where I said I might have, because except for this being blue, everything else up here is saying take this short trade, Dwayne.
Right.
Now that's 1330 on the 20th. So let's go to the 20th at 1330. Okay. 1330. All right. So here's the situation. Even though I've got red and falling here on the 30-minute,
right,
but there's one thing I don't like, that's blue. If I look at the same time over on my 5-minute chart at exactly 1330, what am I coming into on this 5-minute chart?
You had a bullish cross.
Yeah, keep going. Yeah, you're on the right track. Exactly.
Yeah, you had a bullish cross, then it's going to pull back to the BBC to find support, and then try to break the highs, keep going up.
So the question is who do I believe? Do I believe what the 30-minute was telling me here with a little bit of concern? Or do I go, Now, so what I'm saying is I would not have shorted this candle because price was above the BBC on the 5-minute. So as
Right.
long as price is above the BBC on the 5-minute, it can't go lower on the 30-minute.
Yeah. Right.
Right?
Right.
So I mean, this is just like, okay, I'm loving this, but I need you, price, to get on the south side of that BBC so I can do business.
Yeah.
Because the
Okay.
30 minutes says go short, but the 5-minute says, eh. So let's scooch over a little bit. And so price climbs. Okay, so now we don't teach counter trend trades, but and that's only because it's not because it's not a valid trade setup. It's just that a trend trade has a slightly higher probability than a counter trend.
Right.
Okay, so
yeah.
So we watch this thing go leg. So if you're a counter trend trader, and when you recognize that this red candle failed, and what we just talked about over there on the 5-minute, okay?
Yeah.
And then you print this green candle that closes above the weekly trading zone, and it starts to print green. Where's the BBC overhead? Okay, at what price? Yeah. BBC is about 33.72. So leg and a retracement, that's 33.61. Leg and a retracement, that's 66. Leg and a retracement, that's 69. And now that we've hit the BBC on a 30-minute, what are we thinking? We expect it to be
resistance.
Right. And think about it. During the life of this 30-minute candle, at one point it was just a big green candle.
Yeah. Yeah.
Right?
Right.
But then it failed. And then the next candle printed red. Now look what happened at the same time on our 5-minute.
Yeah.
We got a bearish cross. Price drop, pulled back really quick. Now this candle is at 1805. Have we moved that far ahead? 1805. So that would have been during this 1800 candle, right? This red candle right here.
Right. Wow.
So we get a bearish cross. Price drops from 33.66 down to 56. There's a 10-point move, which got underway at about 1805. So that's during this candle right here.
Okay. Yeah.
Okay. So right here, now, again, I got to tell you, shorting here, I would have no problem getting short on this candle, which would be, maybe 33.66, right? So let's find 33.66 over here. Oh, sadly, that's a weekly trading zone.
Yeah.
So I'm not going to go short into a zone. It's going to have to be this 18. Once this 30-minute closes below that weekly zone, okay, I'm ready to take the ride down to the next zone if that's where the market's going, and it appears to be. So 1830. That's right here. So we pull up to red and falling, and then we fail. Okay. Might I have taken a short if I were in front of the chart at 33.59 and been able to, snag a couple points? Yep. And then it hit the zone right there.
Right.
Okay. So then it retraces. So now it's blue and climbing. So I know as long as price is above blue and climbing, I'm never going to sell anything, because price can't go lower on a 30-minute chart as long as price is above blue and climbing. Just like I would never buy in the presence of red and falling. There's nowhere, as long as this stays red from here to here, And let's see what time that time changed. What time did it change? Oh, 1930. Okay, so let's scoot that over. 1930. Okay, here's 1930. Here's 1935. And just to make it easier to see, let me drop 36.65. Okay, so we know that's a weekly trading zone, 65, right. 66. So, I mean, you want to be aware of that on your 5-minute chart too. Okay, you had a nice bullish run, bang, it ran into resistance. So it comes off. You know, it's the battle isn't so much won yet. I mean, it's in this move here, maybe at 2100. And we actually had a trade alert trigger there to take us from 33.57, I guess, down to 54. So we thought it would be a 3-point trade, but it didn't quite make it. But it got back above the trigger, did it again, got back above the trigger, did it again, and got back above the trigger and did it again, big time. These alerts, look for them to be tested and retested because they're important prices, important areas, and price for whatever reason, you know, it's drawn back to them again and again. On the long side, on the short side. So any questions about any of the stuff we've covered? Because if you'll learn to read the 5-minute the same way you read the 30-minute and only place a trade when the 5-minute is in total agreement with the 30-minute, you'll have fewer trades, but your probabilities should increase. I mean, you're doing great.
Right.
I mean, you're doing absolutely great. How long have you been with us now?
Since probably Thanksgiving.
Okay. So yeah, no, you're coming along great.
Yeah, good. No, this is good. Last night and this, what you're doing here is pretty good. I'm usually focused on the 4-tick range, but it's all about adding different time frames. So
see that 4-tick range, we teach you on that fast time frame so that Michael can show you the setup over and over and over and over and over. But when you roll out, you're probably going to want to go with more like a 30-minute, 5-minute combination. But it's good that you learn because, see, if you can learn to think and move and operate on that 4-tick range and live with the number of break evens and stop outs that you have to deal with there, when you do move to the 30 and the 5-minute, you'll feel like all of a sudden your office just got bigger, like you've got, you know, room to stretch, and everything's not quite as intense. You know, the live training room, that's kind of like boot camp.
Right. Yeah.
Right. And
yeah, definitely.
And this can be a battle zone or a pleasure cruise, depending upon whether you're long or short, based upon what the market is trying to do. Of course, in hindsight, it's really easy to see that the market was in a downtrend here. But I mean, did we not have indications early on? I mean, we got our bearish cross. You know, we didn't get it at the high, of course, but we got it right here at this zone. And once we traded through that zone, I did participate in some of this. And then from support, look what we do. We run right up to the BBC, turn around and make the same move back down again.
Yeah.
Again, my only bit of concern here would have been that I was running into blue and climbing. If I'm going to be short, I'd like to have red and climbing here. I mean, red and falling here, red and falling here, and red and falling here. And if I'm going long, if I've got blue and climbing in all 3 places, those are the trades that end up feeling kind of effortless. You know, the ones where you enter and it just dashes to the target. You know, it doesn't mess around, doesn't back and fill, doesn't do any of the traditional. It just, and you go, wow, why can't they all be like that?
Yeah, I think
The closer you get to hearing the rhythm of the market by looking at these two charts side by side and understand the symbiotic relationship of price going from zone to BBC, back to the zone, back to the zone. You can orchestrate that, but yet I published these numbers a week ago or this past Monday morning. Or it came out Tuesday because of President's Day.
Right.
But that's just what price does. It's not some magic. No, it's not a secret sauce. It's just understanding how markets work, reading the chart, and then just doing your best to go with the flow of the market.
Yeah, that's good. Even
Just,
last week.
just sit there and watch it and go, oh, because there'll come a point when you go, oh, well, it's so obvious what the market's trying to do. Bang. Just now you just got to get a ticket. Find the lowest risk, lowest cost ticket that you can find to climb aboard the move that the market is trying to do. We can't do it. We don't do the move. We can't tell the future. But as we learn to read the charts, we're able to understand. The market tells us, okay, this is what I'm doing. This is what I'm trying to do. And sometimes the market will try to do something and fail. Okay, no harm, no foul, no hard feelings. I'd much rather look at the market as my business partner than the enemy, some dragon I've got to go slay in the marketplace every day. I hope this helped.
Yeah, this is very helpful. You recorded it, right?
I was just getting ready to say, oh, by the way, I recorded this. What I'll do as soon as it renders is I'll drop it to you in Telegram.
Okay.
And then with your permission, I think it was a really good session, and I would love to be able to share it with some of the other partners and passport holders.
Sure. Yeah, go ahead.
Okay.
You got my permission.
Well, thank you very much. I enjoyed it. I hope you have a great weekend. If you have any questions over the weekend, you know how to get a hold of me. And otherwise, I'll see you in the room Monday morning.
All right. Sounds good. God bless you.
All right. God bless you, brother. Take care.
Take care. Bye-bye.